What is up, investors? Jason here. So there is just so much fear on YouTube with the stock market and the crypto market. It's getting a bit ridiculous. Now, I just recently made a little short video kind of poking fun at it, but in reality, we're seeing something that we should have expected, which we knew that there was going to be some point where we were going to start seeing rate hikes. It's something that is going to have to happen. We're also going to have to see the end of a bull market eventually as well. Things do turn bearish. Things do go into corrections, and we also do have recessions. These are normal movements within the market. Now, of course, the crypto market is a much more newer situation, and it's something that's completely new for everybody. And it wasn't until these last couple years that most people actually started talking about cryptocurrencies. And obviously 2021 was a major year for cryptocurrencies. So in this video, I want to talk about what is currently going on with the Federal Reserve and why that is causing so much fear within the market. I also, of course, want to dabble in a little bit about all these different influencers that are talking about selling out their whole portfolios, which I think is a bit extreme, but to each is their own. So if you're new here, like I said, my name is Jason, and I talk about subjects like stocks and cryptocurrencies, mostly tech-driven conversations about investing. But if these are topics that you like, please do consider subscribing. And if you don't mind, everybody, do me a huge favor and please be sure to smash, destroy, annihilate, or just gently press that like button to help me out with the YouTube algorithm. Now let's get to it. So Jerome Powell made it clear that inflation is crazy and that the economy is going strong. And there's no doubt that when we think about the economy, that wages have gone up quite significantly in a lot of places. I know here in California, where I'm at, wages have gone up a lot. And at the same time, we're seeing prices of everything go up with it as well. And there of course, is going to be some sort of balance with growing wages and price increases. You're going to pay more, you're going to have to spend more. That's just one way that things are going to work always as well. So apparently this news made the S&P go down 2% for the biggest downward reversal in 2 years. 2-year Treasury yields notched the biggest one-day jump since March 2020 with a 13 basis point surge. It was the third day of volatility as the Federal Reserve concluded its meeting with worrying economic narratives playing out across increasingly thin liquidity. Now, for the bulls, the problem started during the press conference when Jerome Powell batted away chances to assure investors the pace of interest rate hikes would be gradual. Instead, he said, strength in the economy and employment should allow the Fed to be nimble, a level of confidence that investors interpreted as opening the door to increasing restrictive policy. Now, of course, the Feds do need to tighten their balance sheet. We've talked about that before, and the way that they're going to be doing that is, of course, by raising the interest rates. They need to start paying themselves back money. Money's been given out like crazy, and you have to expect that at some point the money printing has to stop. The stimulus has been something that has really helped drive the economy. We got wages up, but we also have multiple things that are affecting the economy, like supply chain issues. That's affecting the prices with a lot of things, which is also a thing that is affecting inflation, which we have to really bring down. So there's multiple things that are affecting inflation, and those things do need to be attacked and addressed. Now, of course, there will be other people that are going to argue with what Jerome Powell is saying. When we think about wages going up, well, we have to also think about there has been a large amount of mom and pop shops that have also closed due to the pandemic, and wages going up mainly means that these larger corporations like Walmart and Amazon, the ones that have really grown employment because their businesses have really been able to thrive during the pandemic, wages are up within them. And when we think about the economy as far as the small business goes, then it's a different story. Now, as you might be hearing a lot of fear on YouTube and with the media about what's going on, when we look at the Vanguard Total Index ETF from the last year, and we look at where it was in January of 2021 to now, it's actually currently where it's at price right now. It's up 8% during that time, which is a very normal rate for it to go up. If we were to compare it to where it was back in the beginning of January of 2022, then it would be up about 22%. So there was a very unnatural increase within the total stock market and the S&P and all that. So if we look at the Vanguard Total Index over the last 5 years, we can see in the last 5 years what this large accelerated growth from March of 2020 on into now has done. We haven't really seen a lot of serious corrections like we were used to seeing. We had seen corrections more commonly, and there were pretty big corrections that we would see very often, but we didn't see many of those through this insane bull market that we had. The rebound was quite intense, and it was driven a lot on money printing, on the stimulus. Now, these large corporations, which I'm going to use Apple here as an example, these large corporations, they've been able to accumulate large amounts of debt because it's been very cheap for them to continue reinvesting that money to let it grow faster that way than to pay it off. When you have a low interest rate, what point of it would it be to just keep paying that off when instead, if they were just to invest that money, it would grow even faster, having it work for them. So companies like Apple and Amazon and many other of these large market cap companies did such, and we had seen this large growth within the market. So there's a lot of what's been going on as well has been manipulation. Now, looking at Apple stock, back when they became a $1 trillion company back in August of 2018, we're seeing the growth here. There was just a pretty steady amount of growth in the stock. It took a little bit of a dip. And when we had seen the iPhone 11 come out in September of 2019, we started seeing a little boost in Apple stock until we saw a good correction that was caused during the pandemic before we started seeing all that money, more money being pumped in. And then we saw Apple stock just go on this large growth here. Now, they didn't just become a $2 trillion company. They became a $3 trillion company by January 2022. And now we have seen their stock do a pretty good correction with everything that's currently going on. But it's been cheaper for them to accumulate debt with these low interest rates than to just pay it off. And this is where things are going to be changing. And now looking over at Bitcoin, a lot of that manipulation that we've been seeing in the stock market, a lot of that wasn't able to really affect the crypto market that much. But then when we started seeing the institutions then start changing their direction that route as well and pumping a lot of money into that, then we also saw a lot of that manipulating what Bitcoin was doing. So there's been a lot that's been going on, and now the crypto market is also intertwined within the stock market based off of Bitcoin and Ethereum. Now, a lot of these other cryptocurrencies follow a lot of what Bitcoin does, and this is just the cycle that we're currently in. But still, the growth that we've seen within the stock market and the crypto market has been absolutely amazing. And regardless of what people are being so fearful of, it's one of those things you kind of roll with the punches. But when we look at crypto, the corrections within Bitcoin have been more common, and they're still not as low as they were during their lowest points of 2021, which was actually in the middle of the year. So the crypto market's been much different, much more volatile than the stock market, and who knows how it's going to play out. But when we look at a lot of these large institutions that are invested into Bitcoin, they're not the ones that are selling. It's more of paper hands, people that are just dumping out money because of all the fear within the market. And the fear is something that drives a lot of what is actually going on. So anyways, I just wanted to make this video. I know it's probably confusing for a lot of people, but for someone like me, I'm very bullish. I think it's I think when we do see a big correction, when we do see some news that makes people more bearish, then depending on what type of investor you want to be, someone like me, I'm one that is all about putting money within that market, and that's currently where I'm at. So anyways, I'd like to hear everybody's thoughts and opinions. With that being said, please like, share, comment, and subscribe. New videos coming out all the time. Thanks for watching.